Hi, this is Jason Fielder with the Daily Forex Report for July 31st, 2008. We're looking at the US Japanese yen here today. I'm looking for the range to be between 108.68 and 107.26 for this next range. This market's pretty much moving sideways. The bias has been pretty much to the sideways, so I anticipate us staying within that. Looking for support at this level at around the 107.30 level, and as far as resistance coming into the market, 108.50 area, which is right about here. I anticipate the market being between those 2 points, or hitting support and resistance around those 2 points. If it breaks out of those, you may want to look for a breakout trade. Now, looking at the Euro USD, today it closed up, but it had a very large wick. We have a chart formation here that could possibly be a sign of a reversal. I'm looking for the market to be between 157.37 and as low as 155.30. So that's what you need to look for as far as the range for this next session. I'm looking for resistance to come into the market at around the 156.76 area, which is right about here. And on the downside, looking for support to come into the market at 1.5457. Now, looking over at the pound, we had a setup that I talked about yesterday as far as when I was going to sell short if the market rallied, which was at this point. I was a little early. The market continued higher, and actually I put a stop loss at this point and was stopped out for about a 44 pip loss. But when you consider the downside, where I would have gotten out had the market, had I not been stopped out and the market continued down, that would have been a 154 pip move, which is, a risk versus reward of about 2.5, a little higher actually. So this was a good trade. Today's actually my anniversary, and so I wasn't at the computer. Had I been at the computer, the right thing to do would have been to drop down to a lower time frame and then take a look at the market. Give me a second and we'll do that. See what actually happened during today. Okay, this is what it looks like on a 5-minute bar. So if you're sitting in front of your computer and it goes through your first point, your first target point, and it's just popped up. This is on news, by the way. Had the market gone up prior to the news, then you can look for the news affecting it to come down. If it continues higher, well, then you don't worry about the trade because it's moving higher on you. But this was on news. So on news, and you drop down to a lower time frame, you can actually see what's happening in the market and time it a little bit better than what you can on the daily time frame. But that's the great thing about having setups on the day time frame or the weekly time frame. When they actually go, the time that it hits, if you drop down to a lower time frame, you can get better fills. You can, keep from getting stopped out. I initially said that we wanted a stop loss of somewhere between 40 and 50 pips for this particular trade I was looking at, and the market actually went 48 pips higher than my entry, so really close on that one. But had you seen this and saw this was your entry, you don't want to sell into the strength of the market coming up, but you may have seen this point where we had a pivot bar created. It has a lower low than the bar before it and the bar after it, so that may have been a good time to sell. Definitely another good time to sell would have been at this point. So there's a better way of approaching a trade than just putting it on and walking away like I did. Sometimes if you feel confident about the trade and you accept the risk to reward ratio and you understand what you're going to gain or lose, and you can do that, just set the trade and walk away, that's great. But otherwise, this is a much better way to approach it. Now, taking a look at what we have here, let's go back to the day time frame. I'm looking for the range for this particular pair for during this next session to be at 1.9966 and on the low side at 1.9734. I do anticipate this pair moving lower, although we do have a news announcement. The unemployment figures come out tomorrow. It could affect it, but I am expecting it to reach our target, our initial target that we had. Now, switching over to the Swiss, I'm looking for this market to be between 1.0532 and 1.0370. Now, as far as support and resistance goes, I'm looking for resistance pretty much at this level to come into the market, and on the downside, looking at pretty much this level, which is for support at the 1.0400 level. So look for the market to be between those 2 points to hit support and resistance there. Now, we had the Canadian GDP come out today for May, and it was worse than expected at negative 0.1%. This dropped the Canadian dollar briefly. We have the U.S. GDP that came out as well, and it was released, and the figures were 1.9%. That was just down 0.1% from what it was expected. It influenced the market temporarily, but it did come back. Tomorrow we have the big news of the non-farm payroll for July being released at 8:30, and the consensus is that unemployment has increased overall. So definitely look for that to impact the U.S. dollar negatively. But of course, until it's released, you never know. Never know exactly what's going to happen. So until tomorrow, this is Jason Fielder. Good trading.